All right, guys, I feel like I've got to do this pretty quick, to be honest. Um, it's about Chip. Uh, they just launched yesterday, and they had 6 million secured from Channel 4 Ventures, plus 5 million from the crowd, and 25,000 people are still pre-registered to invest. And they're saying it could be the biggest crowd investment round in European history. They're going public in 24 hours. It's the 1st of October that I'm filming this, so I don't know how big this round is going to be, but it could be massive. Um, it's just enormous. And for me, Chip has been one of the best performing. It's raised 7.5. So it's gone up since they published that note that I've just read to you. It's gone up 2.5 million. So they've got a pre-money valuation of 207 million, which actually is not that high. Although they don't have as many customers as some other fintechs. They've got 400,000. But they've got 6 billion saved and invested. So they've actually got more invested, I believe. Don't quote me on this, but I believe they've got more invested than Moneybox, but they've got a lot less users. Moneybox, I think, are the leading wealth tech investing savings app in the UK with, I think they've got 1.5 million customers. So I think Moneybox are well on the way to being a unicorn, valuation of 1 billion. Chip is 207 million. Oh, 1 second. I've got a phone call. All right, so yeah. So Chip, they're saying it is like the financial advice app with AI. I like Chip, to be fair. Millions of people are underserved. They're talking about revenue comes from platform economics and savings and investments. I think normally about 1%. They're making 33 mil ARR. So that's less than 1% of 6 billion, obviously. It's about 0.5% or 0.6%. So they've got room to move that. They've got room to just increasing their fees to 1%, and they can double revenue overnight. 33 million on um over 200 um is about, I don't know, 5-6x, I guess. So it's still pretty cheap, to be honest. And like I said, I think they could easily get that to 60 million by just tweaking fees. And obviously they're already growing massively. So I don't think it's going to stay at this valuation for very long, which is why so many people are investing. It's kind of crazy. Um, yeah, it's the team. All right, so we can look at the indicative. Oh, one sec. I don't want to go off this page completely. Okay, that's fine. It's not going to. Can look at the pitch deck. We've only got a day before this goes public, so I'm going to try and do this quickly. I'm going to try and publish this quickly so that by the time it goes out, it'll be public, so everybody can take a look at this. Oh, what's going on here? Okay. So they're aiming at a billion valuation. Total shares in issue are 74, plus the options are 85 million shares. This is going to dilute shares by 5.6 million, which is about 7% or something like that. Whoa, sorry about that. So you'll have 91 million shares. Current share price is 2.42, and they're saying the potential share price could be 11. So you're looking at about 5x, which is about what it is anyway. It's about 207 million. Comparables. This is interesting. They haven't got. That's really interesting because they haven't got Moneybox there. which is kind of interesting. Wealthify is quite cheap at 17 million. Free change at 160. Pensions B is 360. I think pension Bs are overvalued. That's my opinion. Just my opinion. Monzo, Revolut, wow. But then Monzo and Revolut are actually making money now. They weren't a few years ago when I was a bit. Yeah, I actually called out like a potential devaluation in Monzo and Revolut, and that's exactly what happens. But since then, they've become profitable and they've bounced back. So indicative, 3,000 for voting shares or investing less than 3,000. Let's look at less than, let's say 2,500, and then it will say it's pretty basic, this, to be honest. It's not talking about number of users or whatever. But it's just saying that it's going to 5x. So yeah. I'm going to go back to, surprisingly basic that they're getting so much. To be honest, I think the reason they're getting so much traction is just because the shares have ballooned in price. The company's grown so much. Um, 28,000 investors. Yeah, I mean, they're not the biggest of the startups. As I said, Moneybox is a lot bigger. And we're not going to watch the video. I'll let you watch the video 'cause sometimes it doesn't play very well. But I do want to look at their deck. I want to have a look because they're going to do forecasts. So let's have a look at that. Ah, got a little kid there who's a girl that looks not too dissimilar from my 2-year-old daughter. Anyway, yep, there's risk here, and I'm not a financial advisor, so don't take this as financial advice. This video. It's a welfare, as we know. Sixth fastest growing tech business in the UK. I wonder where Moneybox is there because that's the company I'm comparing this to. I'm a big investor in Moneybox. You know, when I say big investor, I'm talking about my investable assets. There's a percentage of assets. I have well over 10% of my liquid assets, or some, not exactly liquid, but cash assets invested in Moneybox. And I only have a fifth of that in chip. So I know Moneybox, and I've been a Moneybox user since like 2017. As soon as they launched, I was basically a user. So I don't even have chip, I don't think. But let's look at it. It's founded 2017. I think that was slightly after. I think it was slightly after Moneybox. Correct me if I'm wrong in the comments. They gained open banking. They gained the FCA regulatory body payment authorization. They linked in with ClearBank, and then 2022 they launched savings accounts. Then they grew to 1 billion assets under administration, and then 3 billion in H2. So they grew massively in 2023. I don't know what 3LOD is. I'm not sure what that is. And they launched stocks and shares ISA and a general investment account. It's past 4 million in 2014 and 6 million. So they are growing like assets. It's really important to think about the assets under administration or assets under management or however you want to call it. The assets they're holding in their platform, because at this point they're taking around zero point 0.6 roughly of their assets. So if they're making 33 billion on 6 billion, but they've basically doubled assets in less than 2 years at that rate, then they're doubling every sort of 1.5 years. So you can see revenue probably and being fintech and software as a service, profit is a it's probably going to be quite high margins, probably going to be 90% profit. So it could go to 60 million in 2027. Remember, if they up their fees to 1%, it could easily go to 100 million in 2027. But let's keep it at 66 in 2027, and then 122 million in 29. I think at that valuation, they'd be worth 10 billion. So that's 4 years from now that you could 5x in 4 years potentially. And They haven't mapped this to user growth. They should put user growth in so you can see average amount invested per investor, and then we could do this a bit more scientifically, I suppose. All right, so they've got Channel 4 Ventures. It's amazing Channel 4 are seeing this because the growth is amazing. Like my investment's already gone up 5x. I only put in a couple of hundred quid, which is a shame, but um all right, what we got here? They got 3.3. Market opportunity is huge. It's gaining market share. It's got the products, blah blah blah. Yeah, this is the big thing that I'm thinking about as well. Like the big wealth opportunity is the big wealth transfer. So like billions are going to go like over the next 10 years are going to go to millennials and Gen Z. Unfortunately, I'm not one of those. My parents don't have much money. So I'm not going to benefit personally, but I think a lot of people will, and they won't know where to invest. They won't know how to invest. And it is going to flow a lot into fintechs because that's the thing that young people um, trust. I think larger inheritances are probably going to go to established players like Hargreaves and Lansdown and St James's Place and Fidelity and Morgan Stanley and Goldman Sachs and things like that. But I think the vast majority, which I think will probably be more money, people inheriting like 50K to 500K, they're probably not going to go to Morgan Stanley. I don't know what the minimum is for Morgan Stanley. I think it might be 1 million. I'm not sure. Um, they're going to go to apps like Moneybox and Chip. AI is changing the game. Yeah, okay. Chip has strong competitive advantages. I think they have a platform. I don't know how then and they've got the people and they've got the competitive advantage they actually have is how quickly they can raise money and how quickly they can acquire customers. I think the product is probably not too dissimilar to all of the other products. And here we go. They're talking about St James's Place. That's kind of funny, actually, isn't it? How I mentioned they haven't got Morgan Stanley on here because I think it's and Goldman Sachs. I think that goes up to it's past this chart, but Hargreaves. Okay, so Chip is like playing. So they're saying that they're not playing in the money box realm. They're saying that the mass market are people with Plum and Moneybox, and they're trying to differentiate themselves away from Moneybox and Plum. But guess what? I advised one of my friends to work at Moneybox. He's been working at Moneybox for 5 years, and I regularly ask him. A lot of the people have a lot more than 10K in Moneybox. There are people with like 1 million invested in Moneybox. So I don't know if this is an exact, obviously that's just one example. Maybe this is right, but I actually think Chip is probably around the same as Plum, Moneybox, and these others. Nevertheless, it is what it is. Um, so they're saying the initial deposit is 10K in Chip. Um, that's interesting. So that's quite a big initial deposit. So maybe they're transferring it like from an ISA or something. Because people earning 50K a year, I can tell you like 50K a year after tax is not that much. Might be 3K a month. People probably got like two and a half in costs. So their investable assets every year is only 5, 6 grand. And it might not all go into Chip, but it's still impressive. So they're able to target wealthier people, which is good, and people that are earning, 50K plus. And I do agree with that. I think Moneybox and Plum is the younger people with slightly less money that are not earning 50, maybe they're earning 30 plus. So that's interesting. I didn't know that. Um, Incumbent banks today and legacy investment platforms tomorrow. Okay. Yeah, I think this is a bit of a bigger ask because I think some people, some of their portfolio customers, when their assets grow, they may migrate to things like Hargreaves Lansdown, Fidelity, II, etc. Some will stay though. I think there will be some stickiness there. So I think they're on the right track. Yeah, I think this is obviously it's very good. So they want to like target advise assets. This is the wealth management, and this is interesting. doesn't scale. It relies on face-to-face human consultations. A little side note is I'm actually considering moving away from marketing, investments and marketing planning roles and into wealth management and wealth planning. So I'm actually considering doing that as a change of career, but that's a side point. And I actually am thinking about this face-to-face thing that I think older people and people that inherit will actually go towards face-to-face. So I think there's going to be 50-50. Half people will go to apps like Chip, and the other half, they want to speak to somebody face to face. They probably want to speak to someone a bit younger. They probably don't want to speak to like a 70-year-old wealth manager or a 65-year-old wealth manager. They might want to speak to someone 40, 50 who knows like about angel investing, who knows about. So that's the kind of thing I'm interested in. And I think people that are inheriting money, they will look towards tech, and they'll also look towards. I don't think this is going to like take the whole market. I think the face-to-face market is going to become more relevant because I think there's going to be a skew. Half are going to go towards tech and AI, and the other half I think are going to stick with face-to-face and people that have got real experience. Yeah, and it's great to have an average balance of 15K. To be fair, I'm going to take back what I said here because to have an average 15K is probably higher than Moneybox. Yeah. So that's very good. I'm kind of curious how they've done that. Maybe it's in their positioning and their marketing. I haven't. So let's look at the product and tech. I'm not even sure they're going to talk about the marketing in this deck. But let's have a look. They're talking about the products. They've got savings, they've got tax wrappers, ISAs, obviously, guidance and reassurance. Reassurance. I like that. I think that's how you target the people with more money, is you give them more tools. Moneybox is doing this with forecasts as well, but I think there's a lot of room for like tech to improve this because it's not that difficult. It's software. It's zeros and ones. They can improve calculators and whatnot. The wealth plan. That's really interesting. An automated plan to what to invest in short and long term. Make it so like from Star Trek, and Chip's AI could crack on with the legwork, opening accounts and things. That's really cool. That's brilliant. They can just do it in the background, and I think that's fantastic. And I think wealthy people, I think everyone, if you have 15K in assets, or if you have 1.5 million in assets, will appreciate that someone, the AI of Chip has got a plan together and is going to open the accounts on your behalf. I think that's brilliant. Pensions, they should be doing pensions. Pensions is where the money is as well, because that pensions grows over 50 years. And private pensions can be inherited as well. A lot easier than like, yeah, I mean, typically people would give their pensions to their spouses and their kids. So I think that's a really long-term play for Chip. That's where the asset pool could really explode in a good way. It could go from 6 billion to 60 billion in not too long a period of time because people are going to be inheriting pensions from their parents and grandparents. One app every ISA, a super ISA. Okay, it's interesting. JICEs, that's Moneybox as a JICE. I've got one for my little baby girl. It's only got a very small amount in, but yeah, there you go. And I've got a Lisa with Moneybox. So I feel like they're covering what they need for their current market, and they're looking to adapt it and grow it with the ISAs and pensions and the AI. Um, so they're going to do this in 2026. They're going to do the household super ISA. They're going to launch SIPs, JICEs, pension consolidation. This is fantastic. This is absolutely fantastic. So they've won the best finance app a few times. I'm sure that like bounces around the different providers, but still, it's good to see they got good reviews. I used to work for Trustpilot actually. Anyway, um, bespoke technology. I know a little bit about this, but I'm not going to go into this. If you're a developer, then you'll know more about this. Microservices I've heard are a good thing and are scalable. This is just something I've heard. Same with AWS and GitLab's the dev tool. I know Python and Databricks. And I've heard some of these things are very scalable and very good. I haven't used them myself, so I don't know fully. So they're using affiliates, referrals, SEO, and PPC. This is my world. This is the marketing world. Um, okay, so they're using influencers. That's good. I suppose I'm a micro influencer in the finance space with only 500 subscribers. If you haven't subscribed, then definitely do subscribe. I've made some very good opinion pieces, and one of which I've made several videos on chip, and it has 5x'd in 2 years. And a bunch of others as well. I've done videos on Moneybox, and I think that's up 3 or 4x as well. Plus, there's a few other things in there. NatWest and the other banks doubled after I talked about them. Not because I talked about them, but I do like to highlight things. So I count myself in as a finfluencer, I think they call them, but I'm a micro. Um, SEO and PPC, that's my world. Obviously, digital marketing is what I've done for 15 years. If you know anyone that wants any marketing work, then let me know. I've managed 20 million in ad spend, a bit more than that maybe, and worked for some big companies like West and Meta and whatnot. Anyway, they're doing everything. Referral campaigns are brilliant. Affiliates are good. Influencers is good. They're in the mainstay places and they're optimizing for SEO and PPC. They haven't talked about their cost. I wonder if they're going to do that here. Right, so talking about out of home, which is very expensive, and it's also very, very hard to attribute. I did see this on the tube and I took a photo. This is the London Underground. I live out just outside of London. Um, this is fine, but what I would like to see, and I don't know if they're going to see it, is the CPA, is the cost per acquiring a customer, and they haven't put it in, which is a bit annoying. They've got an amazing board. I mean, this guy, Adam Seal, was at the Bank of England, and he was the CEO of Interactive Investors. That's pretty amazing. And then we've got the ex-CEO of Phones for You and Barclays Private Equity. So that's pretty amazing. COO of Revolut, formerly CEO of Tide. I mean, they've got some fantastic board and executive team as well. Amazing. Financial details. I wonder if we'll get user forecasts here. Bum, 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 bum. This is the past, or the current and the past. So they've grown users by 151,000. We don't know how much they spent. 100,000 is that? 100,000 extra. Um, we can probably figure this out, to be honest. No, they got 400,000. They got 127,000 on 100K extra. So is that a pound a user? Really? That's crazy. Their costs have gone up basically 100K, and their users have gone up an additional 127K, which means they're getting users for 80p or something like that, which is mad. Um, Marketing costs. Well, the marketing costs have gone up from 781,000 to 2 million. So I've missed that, obviously. I was thinking would be part of the direct cost, but it's not. Um, so the overall costs have gone up. Is this in thousands? So they've gone up 4 million. The marketing costs have gone up, I don't know, about two and a half, something like that, 2.5 million. So 2.5 million to get an additional, or to get 400,000, an additional 127,000. That's not looking quite as good. Um, that's not looking as good at all, really. I'm going to pause the video here or mute myself. I'm not going to mute myself. I mean, at the end of the day, the gross margin, as I mentioned, I said earlier in the video, it's likely to be 90%, and it is 90%. Profit is going up massively. The profit's gone up 4 million. They spent an additional 4 million, so like they're breaking even on the amount they've spent. Plus, guess what? They're already raising a shed load of money today. They've raised 13 million today. That could easily go to 15 or 20 million by the end of tomorrow. So if they put that directly into marketing, they could get quite a lot more users. Um, I don't know. I'm not going to bother working it out right now. But it's probably about, I don't know, 30, 40, 50 quid a new user. Um, but yeah. Net assets, that's interesting. Like they're obviously not talking about the assets under administration as net assets. So they're just classing everything else as net assets, which is interesting. Um, and they're not accounting for any new users and asset, even though in a software firm it definitely is user counts, mate. Yeah, so they're undervaluing themselves from a net assets perspective, I think, to a gross degree, because of the net users and the book of assets they manage or administer. So I think that's interesting. I'm going to ignore that basically. I think 200 million is a fair valuation if you've got 400,000 people who have on average, 15K invested with you, and overall 6 billion assets under administration. So they've got 8 million in cash. They're still losing a little bit of money, but I'm really not fussed by that. I think that these are guys going to go into profit whenever they want. Um, they could up the fees, they could reinvest, they could do lots of things to get back into to get into profit. But they're in this growth phase at the moment. They added 50,000 users. Sorry, I'm looking at this backwards. It's gone from 450,000 to 700,000. So I was wrong. The active accounts were 420. Now, this is a really interesting point here, guys, because people could be non-active. Like I haven't invested in my money box. I've moved money around in it, but I haven't put net new funds in it for 2 years. But my assets in money box have gone up about 30%. So I would be considered non-active. So I'd be considered, if I had it in chip, I don't have it in chip, but if I had it in chip, I'd be considered one of the, around 418,000 members who are non-active, but still, the deposits. I don't know if they're talking about, like, this is confusing what they're talking about deposits rather than just assets, because if it's like it's going to be a blend of people of active assets depositing cash in that year versus non-active users who are registered and their assets are still growing. So that's a little, I think this total deposits obfuscates that a little bit. It'd be nice to have two sort of registered users, non-active assets, and then active assets, active account assets. So I'd split that out into two, but nevertheless, we're good. Revenue is pretty good. It's healthy. It's gone up about 5, 6 million. Remember, spend went up I think 3 or 4 million. So we're doing well above spend. Um, as you can see, marketing costs has gone up 2.5 million, but then like revenue has gone up loads. It's gone up like 6 million. So yeah, it's like a marketing driven organization really. The tech and the product is great, but like the marketing is gonna turbocharge this. So I'm really like, as a summary, stop sharing my screen now. As a summary of that so far, it's raised a lot of money. It's got a lot of people interested. It's got growing amount of users. I'm going to refresh this because when I started this video, I don't know, 10, 15 minutes ago, whenever it was 7.4 million. We'll just see if they've raised any more. 7.46 was what they had. Yeah, we're up to 7.5 now, over 5,000 investors. So valuation 207, they made 33 million. They're growing users really in a healthy clip. They've gone from 700,000 to the full year 2025 over 800. So growing over 100,000 a year. Um, Marketing costs are about steady, to be honest. But I'd be curious if they doubled marketing spend, if they put 6 million into marketing rather than 1.3 or 3.8 or 2.6, whatever. Just do a really big increase in marketing. What that would look like, especially if they got like someone shit hot at marketing. By the way, that's me. Um, I managed to reduce the CPA at WhatsApp, by the way, the cost of acquiring a B2B customer from 50 down to 1. And at NatWest, just another little slight humble brag, I increased loan customers from 2,500 to 55,000. So I've got experience this. If they get someone really, really good doing the digital marketing, the digital acquisition, like they could, there's no reason why they can't get to 2 million users in a year. They really should be targeting that. They should really be looking to double, more than double the business, more than double revenue within a year with this race. Like a lot of these businesses are doing lots of things though. They're building out the products. They're probably not focused on they're building out pensions. They're building out these family ISA, etc., etc., etc. They're probably not zero focused in on the marketing. They've probably got one eye on it, but they're also doing lots of other things. But there's no reason why they can't double profits within a year. And if they did um, double or triple users within 2 years, they should be think there should be no reason they wouldn't get to 100 million in yeah 100 million like in yeah 1 second, I've lost my slide. Yeah, so um 33 million ARR. There's no reason why they can't get that to 100 million in like 2 or 3 years, and that would get them up to, I think, like a billion valuation. Unfortunately for me, I always seem to get like a chip round when I'm not in full-time work, and I'm not actually in full-time work at the moment. I quit working as global head of marketing for Unilever a few months ago, and I'm just actively applying for work. So I don't have as much money. I would love to, invest a couple of thousand in this, but yeah, I can't at the moment. I'm going to stop sharing my screen. I want to show you what's happened with Chip. Let's just get it up. I think it's been like my best share, to be honest. Like I've only invested, yeah, it's been pretty good. So I don't normally like share how much I've invested in things, but I wanted to illustrate because I think a lot of my listeners and viewers don't always invest a huge amount. So I invested in 2 rounds. I put £100 in 2020. I put 550 in 2021 and 200 in 2022. So I invested about 850, and it's turned into, it's a bit confusing here. It's turned into 2000. It's saying it's 3,300. It's not actually accounting for all of these rounds, but I think because they're convertibles, that was convertible, that was convertible. I think they've just converted into this amount of shares. I believe that's how it's worked. Um, 392 plus 100, 492, 800. I don't know why it hasn't shown. Oh, yeah, there we go. So, yeah, so my 800 has turned into 2,100. Um, Unfortunately, at this time, I'd already invested a lot. So it's funny how timing is so important with angel investing. Um, because these guys came out in September. If they'd have come out in like May, that's when I was doing a lot of angel investing. And after I shorted the market in March, made a bit of cash to put into angel investing. And I probably would have put like a grand or two in this, which would have been, back then it would have been quite good because I would have got, you know, 2,000 shares. So it would be worth maybe 5k now rather than two. But nevertheless, like Chip has been a very good like share for me. So this isn't financial advice, it's just my opinion. But I like Chip. I think they're going to occupy the space they're saying they're going to occupy, the sort of digital financial wealth manager or advisor. And building out their product, I think is a good idea. I think if they can, I think if they can crack digital marketing like even better, I think they'll grow even faster. But I think they will reach a billion, no question. And I mean that's my opinion. I think it's quite likely. Like I think it's a lot. It's an asymmetric bet. I think in my mind because Like, there's no reason why they wouldn't do it. They're not going to go bust. They got cash on hand. Yes, they're losing a little bit every year in EBITDA, but the revenue is going through the roof. And it's only going to, if they can raise 15, 20 million right now, um, you know, sky's the limit really. They're going to have over 28 million or something like that, over 25 in the bank. So they're going to be able to do all sorts of things. So I just hope these guys like Chip and Moneybox like don't sell to anyone. I think they should go the Revolut model and the Monzo model and just grow to like, 20, 30, 40 billion and not consider selling because there's no reason why they can't get to 10, 20, 30 million users in the next, 10, 20 years. Um, and then they could be valued at 20 billion. That'd be nice, wouldn't it? So I hope you've enjoyed this video. Remember, I do videos about listed stocks, angel investing, property, all sorts. Like the video, subscribe if you like what I'm saying. I'm not a financial advisor, but I am considering becoming one at some point in the future. I do digital marketing as a career, specifically customer acquisition and helping companies to grow. But I am looking at potentially becoming some sort of financial wealth planner in the future. Um, if you know anyone interested in either digital marketing or acquisition or wealth planning, then definitely let me know, because those are my two areas that I'm most interested in. Make sure to remember that knowledge is power, especially the right kind of knowledge, and progress is everything. I'll see you guys in the next upcoming video. Take care.